Say the number out loud at a barbecue. £100,000 a year. Watch what happens to people's faces. Somewhere in the silence that follows, everyone at that table has quietly decided you are rich, sorted, done. And here is the strange part. The person earning it is often standing there doing the maths in their head, wondering why it does not feel anything like the number sounds. This video is about that gap, what £100,000 a year in Britain actually buys in 2026, and the very specific, very deliberate line in the tax system that starts eating it the moment you cross it. Start with what actually lands in the account, because almost nobody talking about six figures has checked. On a £100,000 salary in England, take-home pay after income tax and national insurance is roughly £68,557 a year. That is about £5,713 a month. Add a standard workplace pension and it drops to around £5,566. Still an enormous sum by national standards, and we will be honest about that later. But notice what already happened before a single bill was paid. Nearly a third of the headline number never arrived at all. The £100,000 everyone pictured at the barbecue was never real. £5,700 a month is the real number. If you're wondering whether your income will ever actually feel like enough, subscribe. I make this simple every day, one number at a time. Now put that £5,700 somewhere specific, because location decides everything. In most of the north, that income is genuinely transformative. The average UK home costs around £268,000, which a £100,000 earner can mortgage comfortably, often on one salary, with room left over for holidays, savings, and the version of life the barbecue imagined. In London, the average home is £542,000. At a standard 4.5 times income multiple, £100,000 borrows you £450,000, which does not reach the average London house even before stamp duty, and the deposit required is a five-figure sum most people spend a decade building. Layer on a London one-bedroom rent of several £100s a month more than the national average, nursery fees in the capital that can pass £1,500 a month per child, and the commuting costs that come standard, and the same salary that buys a detached family home and school-run comfort in Yorkshire buys a two-bedroom flat and a careful monthly budget in the capital. £100,000 is not one lifestyle, it is two completely different lives depending on the postcode attached to it. But geography is only the second biggest force acting on this number. The biggest is a line drawn in the tax system in April 2010 and never moved since. The moment your income passes £100,000, your tax-free personal allowance, the £12,570 everyone earns before paying any income tax, starts being withdrawn. You lose £1 of it for every £2 you earn above the line until it is completely gone at £125,140. Run the maths on what that actually does. A £10,000 pay rise from £100,000 to £110,000 is taxed at 40%, costing £4,000. But you also lose £5,000 of your allowance, exposing more income to tax and costing another £2,000. £6,000 of the £10,000 is gone. That is an effective 60% tax rate, 62% once national insurance is counted, on every pound earned between £100,000 and £125,140, higher than the rate paid by someone on £500,000 a year. And in one of the stranger quirks in British tax, once you pass £125,140, your marginal rate actually falls back to 47%. The system, quite literally, punishes the pounds between £100,000 and £125,140 harder than the pounds above them. For parents, it gets sharper still, because this is not a taper, it is a cliff. The moment either parent's adjusted income passes £100,000 by even a single pound, the family loses tax-free childcare worth up to £2,000 per child per year, and the 30 hours of funded childcare a week in their entirety. There is no gradual withdrawal. Analysts at Rathbones put the combined loss for a family with two children under 5 at close to £20,000 a year, paid for out of income that has already been taxed, which produces one of the most surreal sentences in British personal finance. A parent offered a pay rise from £99,000 to £101,000 can be dramatically worse off by accepting it. And this trap is no longer a niche problem for a handful of bankers, because the £100,000 line has been frozen since 2010, 16 years without moving, while wages have climbed all around it, and every other tax threshold has been frozen since 2021, with the freeze now extended to at least April 2031. Ordinary pay inflation is dragging hundreds of thousands of people into it who never imagined the phrase six figures would apply to them. HMRC's own figures show around 2 million taxpayers will earn over £100,000 in the 2026/27 tax year, roughly 6% of the entire workforce, up nearly 70% in just 5 years. Within that, the number sitting specifically inside the 60% band between £100,000 and £125,140 is over 723,000 people right now, forecast to reach 850,000 by the end of the decade. A tax quirk that was designed as an obscure adjustment for the very top of the income scale is quietly becoming a standard feature of senior professional life in Britain. Here is the part that people inside the trap eventually learn, usually from an accountant rather than an employer. The trap is calculated on adjusted net income, not headline salary, and pension contributions come off that figure. Someone on £110,000 whose salary sacrifices £10,000 into their pension brings their adjusted income back to £100,000, restores their full personal allowance, keeps their childcare eligibility if they have young children, and gets an effective 60% plus relief on the contribution. The £10,000 that would have been taxed down to £4,000 in their pocket goes into their pension hole. This single, legal, boring move is why financial advisors describe the band between £100,000 and £125,140 as the most powerful pension saving zone in the entire British tax system. The trap, played correctly, becomes a lever. Now the honest reframe, because this channel does not sell fairy tales in either direction. £100,000 puts you comfortably inside the top 5% of UK earners. It is more than 2.5 times the median full-time salary of £39,039. Whatever the take-home maths says, it is a level of income most working people in this country will never see, and complaining about it lands badly for good reason. The point of this video is not sympathy, it is accuracy. £100,000 is genuinely life-changing money in most of Britain, and genuinely ordinary professional money in the capital, and in both places it is deliberately, structurally leakier than the headline suggests in ways nobody warns you about until you're already standing in the leak. So whatever you earn, take the real lesson with you, because it applies at every level of the payslip. The number people congratulate you on is not the number you live on. Find your actual take-home, your actual marginal rate, and your actual thresholds. The child benefit taper at £60,000, the personal allowance taper at £100,000, because the system is full of lines that quietly change the value of your next pound, and the people who keep the most are simply the people who know where the lines are. The barbecue can keep the round number, you keep the real one. If you learned something from this video, hit that subscribe button. I'll see you in the next one.